Sustainable investment in the African context compared to developed markets. We're joined by Greg Barker, who's the Director of Investment Research for Sustainable Capital, just to unpack this concept for us. Greg, thank you very much for coming through. What is meant by sustainable investment?
Hi, Lerato. Well, sustainable investment, in our view, is the integration of environmental, social, and governance factors into the investment management practices of a fund manager. And with the conviction that those have a material impact on long-term financial performance of companies and ultimately also on shareholder value. The underlying premise of sustainable investment is that you can change the behavior of companies by the way you allocate capital. And that's effectively what we're aiming to do by pioneering sustainable investment in Africa.
All right, now what we are seeing in Africa, as Eleni alluded to earlier on, is a lot of infrastructure spend on the part of African governments, really charting that course. And what we are seeing on the money markets is the launching of numerous government bonds to this effect. And that tends to be where the subscription comes in, is that investors choose to move into government securities as opposed to corporate bonds. If you were advising somebody entering the African space and trying to help them weigh up the options of whether to invest in equities or in fixed income instruments, government securities, what would you say?
Well, I think, there are so many different geographies in Africa. You've got to look at your specific investment geography. So whether you're investing, for example, in Egypt, Morocco, Tunisia, Nigeria, Kenya, Mauritius, you're going to encounter very different equity markets, bond markets, and fixed income. But I think you've correctly pointed out that there is a growing trend in terms of fixed income products, in other words, government bonds, sovereign bonds, infrastructure bonds, where previously that market was very immature. That's growing a lot now. And you can invest in a bond like, for example, an infrastructure bond recently in Kenya launched at a yield of 10.6%, 3 times oversubscribed. So those are the kind of yields that are possible. On the equity markets, we're also seeing evidence that equity markets in Africa are maturing as governments are privatizing a lot of state-owned assets. Those typically go through the equity market, and you're also seeing growing free floats and liquidity over time in the African markets.
All right, let's talk about assessment of risk, because if you're moving into fixed income, government securities or any other, you've got to consider the interest rate environment in which you're operating in. We've seen inflation come down in many African countries, but when we see wheat prices go up, for instance, or we're looking at prospects for fuel going forward, we can't say that this is essentially the inflation outlook, one where that's really well managed, for instance. So interest rates becomes an issue, and managing government debt. That's the perennial bugbear for many people, is that when you're investing in Africa, you are essentially soaking up the debt of African governments. How do people weigh up investment risk and political risk as they do business in Africa?
Well, I think political risk in Africa demands a unique approach. If you compare it to developed markets, you're going to be looking at quite different things in terms of control of corruption, the actual government effectiveness, quality of the infrastructure that the government can bring. And so you're looking specifically at those political risks. And also within Africa, there's a lot of diversity in terms of the risks. I mean, for example, Egypt's inflation peaked at just over 24% back in 2008, whereas you can look at a very low inflation environment like Tunisia, where inflation very seldom goes above 3 or 4%. So obviously, if you're investing in, whether it's in fixed income or in equity securities in those geographies, you've got to be on the ground in the countries. And I think that's where in Africa there's no room for what I would call stuffed chair research, where you're sitting in a air-conditioned office in London or New York and trying to do your research from there. You physically have to be on the ground in these countries to be able to assess the risks properly.